Hello guys, welcome to the Trading Parrot. Yesterday we managed to close a daily candle above 100k. We need to talk about this red candle that we are currently forming. Indeed, we are testing critical resistance. We started with Monday breakdown on the 4-hour and we are currently testing support as well. Point of control may come or may not come at the rescue, so we need to talk about that as well. We'll have a quick look at the weekly candle closes from yesterday, liquidation levels, and what is the potential downside for this week. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. If you wonder what happened yesterday, I took the day off. I really needed to reset. So let's get straight into the content. We're gonna have to cover a little bit what happened on Sunday, since that hasn't been covered in my channel yet. So let's get started first comparing 2020 with 2024 here on the left hand side. You can see that there are big differences. Pretty much everybody in the comment is noticing something different. That's fair enough, but there are also some substantial similarities that we haven't broken yet. Starting with this ascending trend line that you can see in yellow in here. In my opinion, that is the point of break. If we cross below 97 and we manage to print a daily candle below that line, from the point of view of this chart compared to the 2020, then we will be doing something very different. Let me highlight some other differences that are worrying me with today's candle, starting with the fact that on Sunday we managed to close above 100k. If we compare with 2020, the equivalent level to that 100k was 20k. We were facing 20k. We saw a rejection on the 1st of December. In this case, we saw a rejection on the 21st of November at 99.5, not necessarily 100k. We had the dodgy candle and we have been creeping up, and this time we have already crossed above 101, putting for the first time a daily close above 100. Looking at 2020, we were still at 15th of December and still not managing to put a candle close above 20k. So that means, one, that we are ahead of what we were doing in 2020, and two, we cannot afford now to turn our back to prices above 100k, seeing a rejection and coming back down. That is very far from what we were doing on 16th of December. On the other side as well, you could argue that we are still on the 9th of December, still 1 week ahead of the breakout that we have in 2020. Sure, but we put the high on 21st of November versus 1st of December, so there is some mismatch in the timing as well. I think the critical part is not the timing, not even those prices, because this is 99.5, it's not 100, so there is some room for mismatch. What is critical is that we defend this ascendant trend line. We have had 3 touches in here, roughly. In 2020, we have 3 touches and then we started creeping up. Can we afford this red candle? I will say that I definitely prefer that this gets bought up and it ends up closing somewhere in this vicinity, so we can still continue talking about price creeping up upwards, not breaking the support. When can we say that this thesis of having an impulsive move in December is completely broken from the point of view of this pattern? Well, if we break below 97 and we put a daily close below that, then I'm happy to move on and look for alternative patterns for potentially breaking 100k, but in that case we have to admit that it might take a little bit longer. And yes, over the weekend we have this breakdown below the orange line, RSI 51. We have a breakout on Saturday that I share on Telegram, and only a few of you guys say the keywords I wanted to hear, which were low quality, low volume on the weekend, ideally not getting a breakout too high because of CME gap. And indeed, we had the breakout. We reached an RSI of 61. We couldn't put a high versus the 61 on the left hand side, and we started coming back down for a breakdown below the orange. So far, the green is what's holding the RSI at 45. But this breakdown is calling for potentially a trajectory into 36 RSI. We're going to look at those levels in the price action. We also have the top, which is 73. You can see it in here, that is coming back down thanks to the movements of the RSI that is calculated using percentile nearest rank, some sort of statistic that is saying that this is our top at the moment. So let's look at those levels using reverse RSI. Let's update the numbers. We got the resistance at the moment, which is located at around 53. That's the orange. The support at 36 with red, and a potential target to the upside if we manage the RSI to recover above the orange line. So now let's focus on the prices and let's discuss that. If we manage to break above 99.9, a closing candle on the 4-hour, then we can start talking about this area in here. You can see that is the top RSI that represents this PNR level calculated with statistics. And that is in confluence with the top of the ascending broadening wedge in here, roughly at 107K. But for that, we do need to close above 99.9K. At the moment, that is resistance. So if we don't break above it, then we continue talking about this target of 95.8K, which was a level of support and resistance multiple times. For example, on the 24th of November, support, resistance on the 28th of November, support on the 1st of December, and you get the point. It's been support and resistance even recently on the 6th of December. Yeah, and I think I was looking at the wrong one. I'm talking about this line here. No, it's the right one, 95.9, correct. At the moment, we are testing 98.2, which we have used as resistance and support 1, 2, 3, 4, 5, 6, and now 7 times. All levels still valid. Going into the daily, we're going to see some confluence with the analysis on the CPR chart that I just did, the first chart in the video. You can see that we have managed to put a daily close above the point, the top of the range, which is 100K. This candle in here is extremely important. This is saying that we are having a breakout from the top of the range, that we should have continuation to the upside. But what is the problem? We started the week on Monday, coming back down and testing that point of control, which is now located at 98.2. Confluence with the 98.2 where we are right now, the support from the 4-hour time frame. Hopefully that's going to hold, and confluence with this green line that at the moment we are testing. It will be really great to find in here support. This is a very important level. That's the most traded volume area in this full range since we broke out from 67K. That is where probably there is the most orders in the book at the moment, from longs to defend that level and from shorts to continue shorting and hoping that we are going to break below the yellow support line in there. On the daily RSI, there is a very, very, very important level spanning all the way from August. We have this trend line that has held the price 1, 2, 3, 4 times, and we are coming back in here to test it at an RSI of 58 on the daily. And on the price, that is this white line that is roughly at 97.5K. We really shouldn't put a daily close below that. That will mean a local breakdown, but in this case it's a breakdown from 126 days, and it could become really painful if we put that close below that. If we don't, this continues to be support at RSI 58 and we just move on targeting higher prices still. And just if you want a little bit of hopium, the top of the range continues to be roughly at around 85, 86. That today in the reverse RSI is pointing at 133K. So the reward for holding these prices and for continuation to the upside, according to the full range to the top on the RSI, is pretty high at the moment, thanks to this cool down that we're seeing today. When it comes to CME, we don't have much to say really, because we closed pretty high on Friday, but we have managed with candle open to go up and to pretty much take everything from there. So I don't think there's any liquidity on CME that we can talk about. When it comes to big whales depositing or withdrawing, there's still this continued battle between them, some of them withdrawing, some of them depositing, and the ratio today is pretty much at 1. Very different to what we were seeing at this time in December in 2023. And if we go to the previous cycle, you can see in October there was massive distribution, and on 18th of December there was a huge spike of distribution. And what I mean by distribution really is deposits from large whales. They deposit on the 18th of December, and probably when we reach 40K early January, they execute that with selling orders that put a drawdown of 28-29% until the end of January. Very good news because the short-term holder realized price is about to reach 80k. The last reading is 79.9k, and this is the level that when there is a decent pullback, I'm not saying that we are gonna have it, but since we are having some red in the market and we could be potentially breaking these levels, no one knows, we haven't done it yet, but if we do, we need to be thinking about where is our short-term holder realized price in case it happened, because that attracts the price. That is the average entry price of short-term holders. When they panic, when they think that there's gonna be a collapse, they all sell, and that ends up acting as a magnet, bringing the price there or very close to there. This is the performance of the short-term holder realized price in this whole bull market. You can see in March, it attracted the price, in June as well, and we spent some months below it, and also in 2024, contrarian to what we used to do in previous cycles, which was pretty much just go there, kiss it, and continue up, kiss it and up. Even in 2021, if we look at this leg in here, we spent September close to it, and then we never ever touch it again until pretty much May 2021. That will be almost like waiting until May 2025 to go back and touch it. But the caveat is that in this cycle, we haven't really kept to that promise of just kissing it. Indeed, we spent months in here below it and again there, so that expectation might not be accurate in this cycle. Extreme Grid still for this December 9 is going to update in 12 hours. I'm surprised that this is giving such a high level even with the correction today. And looking at the weekly RSI, you can see that we've been flat up until the closing candle of yesterday, Sunday, mimicking what we did in here in previous November in December 2023. But with the beginning price action of this week, it's looking like a bearish cross at this point in time. We still have 7 days to undo that and continue in a flat looking stochastic RSI if we manage to break above 100k. RSI weekly managed to put a higher high at 78 versus 77 2 weeks ago, but the beginning of the week is also dragging it back down to 74. Not a big deal yet. Support should be roughly at 69 or 70, we could say, thanks to this ascending trend line in white. I guess we should be updating that level as well. That is 70, which at the moment is 65.9. That is the immediate support from the weekly ascending trend line applied to the RSI. We also should consider the support from this yellow trend line that has held the price for the vast majority of the bull market, with the exception of the last end of the megaphone pattern that we went below it. At the moment, that is located at 66. So let's update that as well. So that is 92k. Bear market starts at 41 RSI in my opinion, based on past performance. And if you're curious what is that, I'm gonna need more levels. I'm gonna do temporary 41 just so you can see it. To enter bear market at the moment, we need to break below 57.6. That's a moving target, just if you are curious where it is. Since yesterday, there's been some liquidations of shorts. It's a mixed bag of shorts and longs, typical from a weekend. And in the last 24 hours, there's been 447 million liquidations, mostly from longs, thanks to this move down, probably. On the short-term liquidation levels, you can see that the market maker is having an amazing time liquidating all these people up until 97.9. That ends there. After that, there is a vacuum. So the question is, are they just going for that and then they're going to start bouncing up? Or are they going to get away with reaching the lows of 96.3, 96.2 maybe? Below that, there is not much more. And I'm hoping that that is it, because going a lot beyond that, we start breaking the support that we are trying to mimic from 2020. If we want a quick and easy pump, we should be respecting the trend line, and ideally this green one as well on the 4 hour, and ideally the white line from the daily, which is pretty close to the price at the moment with the point of control. So we are dealing with pretty strong levels of support. They can get broken even if they are strong, but they are strong. Point of control is a critical one. The trend line ascending is also critical one. The past performance of 2020, ideally respecting it up until mid-December and then exploding to the upside will be great. Liquidity to the downside on the longer term, you can see that now is located at 88.8. That makes sense. We already took this one. We put a lower low and the next low is there. Those are the stop losses from people that entered enter luckily from very close to that area with 5x, 10x, 25x. But at the top, there is more liquidity compared to this, and a move up requires 6.8k to reach the red, whereas the first red in here requires 9.2k. That is just to give us an idea of the effort that the market maker needs to make relative to distance in price to hit large pockets of liquidity. Let's look at the ask versus bid and then the deltas. Don't miss the order book and what we are seeing in here with a rejection of the delta as well. That's also very important. You can see that over the weekend, the longs have been very much taking over the price action, and that is because there's so many orders for buying in this range in here, not as much as we saw in this dip that got bought up pretty quickly. At that point, the point of control was located at 91. Now the point of control is located pretty much where we are right here. So we should be seeing the bid in control. I think the bid is slightly more at the moment than the ask, with readings of 0.1 to 0.14, but it's not as big as this one, which is slightly worrying from the point of view of ask versus bid ratio. And the delta from liquidations on high block capital, you can see that is putting the shorts at higher risk. Just a small difference of 200k. The order book had big orders to buy with 29 million at 98.4, but the price has managed to enter there. So those orders should be filled at the moment if they didn't get pulled out. And what we have after that is 95k with the 18 million, 19 indeed, very small and shallow. And after that we have 40 million and 91k, and that's it. That's our support at the moment. Things can change any point in time and become market orders and trick everyone, but we're just looking at the order book and see what we find. At 100k we have selling for 44.7 million, and at 110k we have 43.5. So there is an appetite to short those levels at the moment in the order book. You can see that longs have a little bit pulled back in here in our area of resistance. So my thesis of a breakout in here didn't play out. I say it's a high risk area to long. I was hoping that the longs are gonna take over and potentially start an ascending channel in here that will be very bullish to later see this oscillating in this way with the price going impulsive. But instead we did what is the highest likelihood outcome, which is to see a rejection from resistance. We came back down. We are at the same level that we were in here on 4th of December. On 4th of December, we have the spike that caused a day after the doji candle. So that's why I'm mentioning that we are at that same level of longs versus shorts. I'm not saying it has to have the same outcome, but the lower this goes into the red, it means that there are too many shorts and that they can really get damaged if the price decides to make another impulsive move to the upside. For me, the best opportunity area is always in the extremes. As I keep mentioning, they are all highlighted in there. So if the longs versus shorts enters in here, probably at that point the price will have retraced further than where we are, but at the same time we can take a much better long in terms of risk. Don't count on getting into here, so maybe this is just the sweet spot, impossible to tell, but you take the risk that you want to take. If you are too itchy and you want to repeat the plate in here, that is the point to do it. If you want to hold on and wait a little bit longer for this, you can do that as well, but I'm trying to tell you that we might not get there, because in order to get there we need to break trend lines, point of control, and a lot of other things that I already said many times that should provide strong support. If they break and you enter in a long and you don't want a long support, if you long support in those areas of strong support and the support breaks, you need to have a plan on how are you gonna manage that risk as well. That is always the case for any trade. To the downside, at the moment, we don't have any fair value gaps available apart from 85k. At the top, we have this skinny one that is at 102k. I probably need to make a video later today talking about the altcoin season and talking about some altcoins. There might be some potential opportunities there that we can look into. You can see that today we have a reading of 71, which means that we are no longer in the altcoin season readings from this index. We need to be above 75 to be in altcoin season. This doesn't necessarily mean it's the end, but at least if you compare what we were doing in 2020, in December we were in Bitcoin season, and we enter into altcoin season more or less in here in March. After reaching those levels, the index stayed there March, April, and it came back down in June. We are in November and we have already pinched that. I think there's still room to come back inside it, but that will depend on what general markets do, the dollar, the gold, and all that stuff. It will be really disappointing to just see an altcoin season that stays 2 days at the top. Anyways, we'll look into that in a video coming later. Have a look at the coins in here if you want me to review some of them. I'm pretty sure that I'm going to be reviewing the larger movers to the downside and upside. To the upside, we only have 2 in the green. So we'll see. Guys, if you want to trade on a top-notch exchange, look no further than Bybit. If you use the link in the description to open a new account on Bybit, you can claim up to 30,000 in rewards and use the lowest fees to trade. This is the exchange I privilege to running my trading bots with different bot platforms and doing manual trades as well, because I have the largest array of tokens and contracts on futures with leverage. But I also use 2 other exchanges that are non-KYC, so it allows me to open as many accounts as I want with multiple emails, trade from everywhere I go without needing a VPN and having to go through all the painful process of the KYC. This one is called Bluffing and is currently offering this campaign that ends on the 14th of December, so still 5 more days that you can claim all these bonuses based on deposit amount and trading volume. Using the link in the description, you get also the lowest fees to trade. The second exchange that also offers non-KYC is Bybit with 9k bonus and 40% discount. If you wonder if the exchange works in your country without KYC, without VPN, just give them a try before you deposit. Open an account. It takes a few seconds using the link in the description. I know in US, in some states, some people told me that they needed VPN with Bluffing, so have a try with Bybit. I'm sure that should work in most places. I'll see you in the next one. Take care. Bye-bye.